Hey everyone, welcome back to Investors Insight 2.0, your go-to channel for smart investing and economic updates. The stock market is a wild ride. Right now it feels like we're strapped into a roller coaster, climbing slowly uphill, anticipation building. Will we soar to new heights or plunge into a stomach-churning drop? That's the million-dollar question, folks. And the answer is, as always, it's complicated. We're at a pivotal moment. The economy is sending mixed signals, inflation is still a concern, and the Federal Reserve is keeping a watchful eye on interest rates. Yet the market keeps chugging along, showing remarkable resilience. Why? Because there's a powerful force at play: innovation. Companies at the forefront of artificial intelligence, cloud computing, and other groundbreaking technologies are driving growth and capturing the imagination of investors. These are the companies shaping the future, and their stories are just beginning. So, buckle up, because things are about to get interesting. This is a market where fortunes can be made and lost, but with the right information and a healthy dose of caution, you can come out ahead. Let's take a look at the scoreboard. The S&P 500, our broad measure of the market, is holding steady, but it's been a bumpy ride. The Nasdaq, heavily weighted towards tech, is showing more life, fueled by the AI boom. And the Dow Jones Industrial Average, representing those blue-chip stalwarts, is lagging a bit behind. Growth ETFs, those baskets of stocks focused on, you guessed it, growth, are still the darlings of the market, but investors are starting to get a bit more selective. Now, you might be thinking, Jim, with all this uncertainty, shouldn't we be heading for the hills? And it's a fair question. But here's the thing, volatility is the name of the game in the stock market. It always has been, and it always will be. The key is not to panic. Don't get shaken out by every dip and dive. Instead, view these fluctuations as opportunities. Opportunities to buy quality stocks at a discount and ride the next wave of growth. Remember, fortunes favor the bold, but they also favor the informed. The AI revolution is here, and it's transforming industries faster than you can say algorithm. And when it comes to AI, two companies stand out: Amazon and Broadcom. Amazon, the e-commerce behemoth, is leveraging AI across its entire business. From personalized product recommendations to optimizing its logistics network, Amazon is a case study in AI-powered efficiency. And let's not forget about Amazon Web Services, the company's cloud computing arm, which provides the infrastructure for countless businesses to develop and deploy their own AI solutions. Then we have Broadcom, a semiconductor giant that's quietly become an AI powerhouse. Broadcom's chips power the data centers that handle the massive computational demands of AI applications. They're also essential components in smartphones, gaming consoles, and other devices that are becoming increasingly AI-enabled. Both Amazon and Broadcom have seen their stock prices surge in recent years, but even after pulling back from their highs, they remain compelling long-term investments. Keep an eye out for any dips in these stocks, as they could present attractive buying opportunities. Section 4, the Oracle of Omaha's next move: deciphering Buffett's strategy. Now let's talk about the Oracle of Omaha himself, Warren Buffett. The legendary investor has a knack for spotting value where others don't, and his every move is scrutinized by Wall Street. So when Buffett makes a big bet, people pay attention. Recently, Berkshire Hathaway, Buffett's investment vehicle, has been trimming its stakes in some of its long-held holdings, like banks, while increasing its exposure to energy and materials. Some see this as a sign that Buffett is betting on a resurgence in traditional industries, while others believe he's simply rotating into sectors that are undervalued. It's impossible to know for sure what's going on in that brilliant mind of his. But one thing is certain: Buffett is a long-term investor. He's not interested in chasing short-term gains. He's looking for companies with solid fundamentals that can weather any storm. So what can we learn from the Oracle? Don't get caught up in the hype. Do your homework. Look for companies with strong track records, sound management, and a competitive edge. Those are the companies that will stand the test of time, just like Buffett himself. Section 5, stocks on the rise: Axon Enterprise and Nvidia. While we're on the subject of stocks to watch, there are two names I want to put on your radar: Axon Enterprise and Nvidia. Axon Enterprise, formerly known as Taser International, is the leading provider of body cameras and other technology solutions for law enforcement and public safety. With growing concerns about police accountability and transparency, Axon's products are in high demand. The company is also expanding into new markets such as private security and international law enforcement, which presents significant growth opportunities. Now let's talk about Nvidia, a company that needs no introduction in the tech world. Nvidia is the undisputed leader in graphics processing units, or GPUs, which are essential for everything from gaming to artificial intelligence. As AI continues to permeate every aspect of our lives, the demand for Nvidia's chips is only going to increase. Both Axon Enterprise and Nvidia are trading at premium valuations, but their growth prospects are undeniable. These are companies that are shaping the future, and their stocks reflect that potential. Section 6. Charting your course investment strategies for today's market. So, how do you navigate this market with all its twists and turns? Here's the deal. There's no one-size-fits-all approach, but there are some principles that can help you stay on course. First and foremost, diversification is your friend. Don't put all your eggs in one basket. Spread your investments across different asset classes, sectors, and geographies. This will help mitigate your risk and protect your portfolio from market swings. Second, have a plan and stick to it. Don't let your emotions get the best of you. When the market is going up, it's easy to get caught up in the euphoria. But when it inevitably pulls back, you need to be prepared to ride out the storm. Finally, don't be afraid to seek professional advice. A financial advisor can help you develop a personalized investment strategy that aligns with your goals, risk tolerance, and time horizon. Remember, investing is a marathon, not a sprint. Section 7. The future of investing. Staying ahead of the curve. The stock market is constantly evolving. New technologies are emerging, consumer preferences are shifting, and geopolitical landscapes are changing. To succeed as an investor, you need to stay ahead of the curve. That means being willing to learn, adapt, and embrace new ideas. It means keeping up with the latest trends in technology, business, and the global economy. And it means being open to challenging your assumptions and adjusting your investment strategy as needed. The future of investing is bright, but it's also complex. The investors who thrive in this environment will be those who are informed, adaptable, and willing to embrace the unknown. So stay curious, stay informed, and never stop learning. The market rewards those who are prepared.